This video reflects my personal opinions only and is for educational purposes. It does not constitute any investment advice. All investments involve risk. Please assess carefully before making any investment decisions. If you are still chasing overvalued AI software stocks, you are missing the most secure volume play of 2026. Mainstream commentators are staring at lagging charts, warning that hardware is overbought. But they are completely blind to actual supply chain data. The reality is that global enterprise corporations, the customers of big tech, are facing a massive, mandatory one-time capital expenditure refresh. This isn't a discretionary upgrade, it is a forced infrastructure reset triggered directly by cloud hyperscalers. Today, I will use core tech logic to dissect the largest personal computer companies on Earth and show you why this wave is triggering an explosive earnings squeeze. More importantly, which specific player is best positioned to absorb this capital. Watch until the very end. Hello everyone, I'm Fundman 101. I spent 25 years as an infrastructure engineer at Microsoft and Amazon. Having spent over 2 decades building the back-end systems of the tech sector, I understand how these corporate business models actually function. My goal is to use these boots on the ground industry insight to help you build disciplined portfolios and identify realized long-term value. Why is this device refresh mandatory? Because businesses face 2 massive pressures: AI incentives and forced compliance. First, the incentive. Many argue that Microsoft's Copilot cannot compete with OpenAI or Anthropic's Claude, but they are missing the point. Regardless of which underlying AI model you use, execution must run natively inside the local operating system layer. Microsoft's new Windows upgrade provides a native AI agent layer that hosts multiple LM models. This brings a 10x jump in employee productivity, but it requires high processing power of up to 80 TOPS. Old computers cannot run it. Second, the compliance hammer. Amazon is officially forcing a strict cloud security upgrade called Zero Trust. Legacy software encryption is dead. Amazon now mandates physical silicon-level security chips directly on the device for network verification. If companies do not upgrade their hardware, employees will be completely locked out of the network and unable to work. Organizations must comply, handing PC manufacturers immense pricing power. Even with suppliers hiking component costs, manufacturers can pass 100% of these expenses straight to their corporate clients, expanding net margins. As massive budgets from big tech's customers rotate into the personal computer sector, only a few large manufacturers control global commercial distribution channels. The first is Dell. Dell dominates enterprise server pipelines. As Amazon forces its cloud network towards strict zero trust hardware upgrades, Dell will capture immediate server tier infrastructure orders, establishing a solid baseline for institutional capital. The second is Lenovo. As a global unit volume titan with massive supply chain scale, Lenovo's vast commercial sales channels will directly absorb massive bulk orders from middle-market corporate IT purchasing managers. The third is HP. HP holds a premium fortress moat across the global high-margin corporate workspace sector. Their hardware natively integrates proprietary, patent-protected silicon-level secure endpoint chips. As forced security upgrades structurally push commercial PC prices higher, their gross margins are positioned for explosive expansion. All 3 manufacturers are cleanly aligned with this corporate capital wave. But from a strict trading perspective, which stock possesses the absolute maximum safety margin and has completely lagged the sector re-rating. I have detailed the comprehensive financial breakdown and our tactical selection inside my 2026 PC Recycle Deep Infrastructure Analysis Report. While mainstream commentators scream about overbought hardware indicators because they are reading lagging price tickers, they completely misunderstand the reality of big tech's customers want: time CapEx logic. This mandatory refresh wave is officially active, but to navigate this sector safely, you need to know exactly how to deploy your capital. I have detailed exactly which company represents our core position, along with the precise fundamental data backing our safety limits, inside this brand new report to help you see past the market noise and position your desk ahead of the curve. To get your free copy of the report, scan the QR code right here on the screen to join my WhatsApp group. Once you're inside, simply check the group info section to download the file instantly. If you want to take your portfolio a step further and have me personally guide you through your long-term asset positioning one-on-one, feel free to send me a private message inside the chat anytime. Finally, make sure to subscribe to my YouTube channel Fun101 and hit the notification bell. See you all inside the group.